tax day. It is now just 1 week away. Whether you filed and have a question about your refund or you haven't filed as of yet, Ryan Dodson, CPA with Stanaland Dodson and Associates, is joining us to answer your questions. You can text them by just texting that question right there, 336-379-5775. All right, we have a few questions already. This one says, does May 1st extension for federal and state apply to all North Carolinians or only those impacted by Helene?
Well, yes, it does apply to all North Carolinians. Although I encourage everybody, if you have your tax information, just go ahead and file it now. Or if you think you're going to do an extension, go ahead and get it in by the 15th so you don't get mixed up with the IRS wondering or having to remember that North Carolina was a federally declared disaster area because of the 2 hurricanes.
I guess because the damage was so widespread, they didn't know how it should, cover just certain parts of North Carolina. So really, all North Carolinians can wait until May 1st.
They technically can, although I do not recommend it.
What would happen if you did wait till May 1st?
Well, you can wait till May 1st, you can file your tax return, but the one thing about dealing with government entities such as the IRS is that they have to remember that North Carolina was under a federally declared disaster area. And they may not know that when they initially take a look at your return, and they may say, oh no, your return was filed late. Therefore, you're going to be subject to the failure to file penalty of 5% for that tax. And that's why I encourage everyone, just go ahead and extend your return as of April the 15th, or go ahead and file your return as of April the 15th, just so there's no confusion and you don't have to deal with the letters going back and forth the IRS later.
Of course, that only happens, like you would only get charged that 5% if you owed taxes. So if you're getting a refund, it doesn't really matter, I suppose.
Correct.
Interesting. Okay. How do I know if I qualify for a tax credit like the earned income tax credit?
Well, the earned income tax credit is depending upon several different factors. The big one is your income. So a household income a family with 3 dependents that has income of $55,000 or less, it qualifies for the earned income credit. But then, of course, there are other requirements such as, are these children, are the qualifying children on your tax return? So there's income tests and there are dependents tests. And even if you have no dependents, you may qualify for the earned income credit. However, that income limitation is very low. It's about, for folks that are earning $14,000 and less. And when I say income, what I really mean are like wages from a W-2, nothing really else.
Okay. This question is about Social Security. This person makes, let's say, $16,000 in Social Security. How much of my Social Security is taxable?
So there is a wonderfully complicated formula for determining if your Social Security taxes are taxable. The way that is calculated is that they take half of your Social Security plus all the other income that you earned during the year. And if that amount exceeds $25,000 or $30,000, depending upon your filing status, then your Social Security starts becoming taxable. So if the only thing you have is just $16,000 worth of Social Security, none of it is taxable. But if you have other income with it, it may become taxable depending upon how much that other income amounts to.
Gotcha. Okay. This person's asking, and we just kind of touched on this a little bit earlier in the newscast, can teenagers that are claimed by their parents file a tax return?
Yes, they can by all means file a tax return. A lot of times they're not required to file a tax return. Typically, if they're earning less than $14,000 as a general rule, they're not required to file a tax return, but they may want to file a tax return, especially if there was any federal or state withholding coming out of their paycheck. And look, that's their money, and if they want it back, they have to file a tax return to get that money back.
All right, but they are still claimed as a dependent on your tax return. That doesn't go away for you, which is great. Okay, this is a question that says, do we have to file taxes if we file joint and we're both over 73 years old?
It unfortunately is not determined off your age. It is determined off of your income. So it really depends upon how much your income is as to whether or not you're going to be required to file. And if you're a married couple and you're both earning income, the amount is typically right around $30,000, it will determine whether or not you actually have to file a return or not.
Okay, quickly, 30 seconds. Is VA disability income countable in North Carolina?
VA disability income is typically treated just like Social Security income, so it depends upon your other income that you do have coming in.
Gotcha. Okay. Thank you so much. We know it's 1 week and ticking and you are busy. So thank you for your time and your expertise. We appreciate you.
Thank you.
All right. Right now we're going to take a quick break and look at what's going on forecast wise.